Hi, everyone. Our session today is about the virtual banking landscape in Asia. I'm Serena Ng. I'm the Asia Finance Editor of the Wall Street Journal. I'm based in Hong Kong. And I have with me virtually, Osman Faiz, who is the Chief Operating and Information Officer of AMTD Digital, and Christopher Davidson, the CEO of BigPay. So Osman and Chris, can you each give our audience a short description of what your companies do and some color about your personal backgrounds? Osman, you can start.
Hey, hi, thanks for having me. So I'm Osman Faiz. I work for AMTD Digital in Singapore, which is now headquartered in Singapore. So I spend most of my time in the traditional bank for 27 years. So AMTD Digital is a very fast-growing fintech digital ecosystem player, where we are expanding our ecosystem across Hong Kong, China, Singapore, and Southeast Asia. It's a platform and partnership play, which is more about collaborating and expanding the financial services across the footprint. So this is where I would say, we are growing and expanding our business with a place in Hong Kong with Airstar Bank, and now in Singapore we have applied for our digital wholesale bank license as a consortium.
And Chris?
Hey there, thank you for having me here. So I'm Chris Davidson. I am the CEO and co-founder of BigPay. So I would say we're one of the largest challenger banks in Southeast Asia. We have about 1.2 million users, predominantly in Malaysia. We have just launched in Singapore, so we just opened to the public the end of September. So we operate under an e-money and remittance license, and we're about to start lending. So I'd say we were the first kind of neobank challenger model in Southeast Asia, and we're certainly one of the largest right now. And we have been looking at expanding out into the virtual banking framework, specifically more in Malaysia. My background is I've been in financial services all my life and in fintech in London, and then moved out to set up BigPay 5 years ago.
Great, thanks for those introductions. So I think since we're going to talk a bit about virtual banks today, I thought it would be helpful for us to first talk about what is a virtual bank. I think people would want to know, like, what does a virtual bank do that's different from, let's say, the online website or the mobile app of a traditional bank. Chris, maybe we can start with you.
Sure. So I mean, technically they're very similar in many respects. I mean, a bank, we're talking about the regulatory licenses that allow you to do things. I'd say some of the frameworks for virtual banking are slightly more limited than a full banking license. And you're seeing the emergence of virtual banking as a concept in Hong Kong, Singapore, Malaysia, a few other countries. What you see in Europe and America is that you actually have full banking license, and companies like Monzo, for example, just applied for a full banking license, or another European country. So they don't really delineate between virtual and full banking licenses in those countries. In these countries, you've seen the framework and evolution of this, which is in some ways just slightly different regulation, maybe more limited scope of operation, and slightly more prescriptive to allow new players to come in and be a virtual bank. And from a technical point of view, I guess the aim is to be obviously fully digital, all online. It's not a branch network. It's not how old banks were run. And I guess from a business point of view is to remove all the legacy technology, start from scratch, not have a traditional core banking system or use the next generation core banking system, do eKYC, all of these things that I guess many of the challenger banks have been doing, or people like us who don't operate on a full banking license have been doing since we began. Just bringing it into the mainstream in the countries that have virtual banking frameworks coming out.
Osman, do you see it differently?
No. I mean, I guess Chris and I are on the same page, and both have spent quite long time in this industry, indirectly. So this virtual bank, typically in different markets, have got different regulations, and it's a way, in my opinion, that regulators are allowing the other players to come in, and they can look at unbanked or underserved client segments who can be looked at by those virtual banks who are, as Chris said, no physical presence, but more online services, which has its own challenges, of course, but it's a new way of doing banking which we are all trying to explore in different ways.
Oh, yeah, and Osman, so in Hong Kong, AMTD has a partnership with Xiaomi, the smartphone maker, and you mentioned earlier that you guys have a virtual bank called Airstar. Could you talk a bit about what it does, what makes it unique, how it is getting customers away from traditional banks?
Yeah, I mean, thanks for this question. It's quite interesting. People keep asking in Singapore the same question. So AMTD started, getting into the virtual banking space. First was in China, Sinwang Bank, and then in Airstar with partnership with Xiaomi. So we all know that there was 8 digital bank license that HKMA gave, one of which is Airstar. Now, in this space, what we did basically give you a few examples. If you have 20,000 Hong Kong dollar, the customer savings account, we give 3.6% interest rate, which is significantly higher for compared to any other general banks that you would look at. If you convert that to time deposits, it's even also higher compared to the market. And if you're opening an account, 3.6%, we are also guaranteeing interest rate protection up to 3.6% until June 2021. So the idea is, even on the lending side, we are giving personal loan as an example. If you come in, we are giving online by using the Airstar app at 2.99 on interest rate on a daily basis. And we don't have any handling fees charged like any other incumbent banks. So this is a new way of incentivizing the customers or unbanked customers or underserved customers to come and do banking with us, which is quite disruptive, I would say. At the same time, we are treating customers as our VIP. So we assist them growing their wealth. The mission is, we are trying to become everyone's bank. As I said, underserved or unserved customer segment to come in. And we are trying to solve that through technology. And it's all technology-driven, data-driven platform banking.
Chris, and you guys are in a very interesting area that's really hot right now, payments, and you have a very innovative strategy of not spending a ton of money to get customers. You can talk a bit about how you guys have grown so quickly.
Sure. So it's kind of slightly inverted model. So I guess traditionally, like credit cards giving you cash back and points and things like that, or incentives to join, we really don't give much of the way incentives. We give slight incentives. And what we're trying to build is just a really, really good product that offers value. So I guess we're not charging high fees for cross-border movements of money or for using your card abroad, or when we move into lending later this year, we're giving very fair and transparent financial services and credit. So what we're trying to do is actually make it very lean, very transparent, and pass those savings on to the user. The margins are quite thin. I mean, you need scale for financial services. So I think you're seeing this with some of the e-wallets as well. I mean, they offer, especially say in Indonesia and stuff, huge cashbacks, right? It's a non-sustainable model. And I think that's what people are seeing now, is that actually you need to create a unit economic business that works and is sustainable as a business, and then it also offers value for the customer. As you grow and you are a purely digital and efficient solution, you are always going to be more efficient than a traditional bank. It's just more scalable.
So I think the next question is for both of you. Like, what are the biggest opportunities that you guys are seeing in the consumer fintech space? Where's the growth going to come from?
Yeah, thank you. I think firstly, the largest proportion of the fintech companies, they're all coming into the subprime, I would say, consumers, the young, the Gen Z, millennial kind of customers to acquire. In many ways, they have, or others in the sector have got no or poor damaged credit histories. I would say that this field is overcrowded, and challenger banks will have quite a bit of a challenge to acquire vis-a-vis the incumbent banks, I would say. But in my view, why should we ignore the customer segments who are with a lot of money? That part of the segment, I would say, are have got a lot more opportunities to tap on. I would also say that in the fintech space, if you look at the potential, I would say in next by 2023, there was a statistics that the annual sales in the insurance market is going to be about 23 billion growth, just particularly for insurance. If you apply in the fintech on the service provider side or the payment processor side, that is likely to grow by another 23 billion by 2023. Similarly, the fintech market through technology, there is a potential of another angle of having 22 billion of growth of the sales volume in that space. So there is quite a bit of opportunity regionally as well as globally in that space for all the players to grow and focus on.
And then how about you, Chris? Like, what's the demographic that you see the most growth opportunities among?
So the vast majority of our users are actually pretty affluent and 25 to 35. And as the world is moving, I mean, everyone is just transacting online. I mean, I think actually COVID has accelerated this trend. I mean, even people like my mother are now like shopping online more than they used to, and you just don't have a choice. And so everyone needs an ability to do e-commerce. They need to then actually borrow online. They need to be able to not necessarily go to a hole in the wall to send money. They just want to transact in one place seamlessly from their phone, and building native services that allow you to do that. It's a huge market. I mean, just as an example, in Malaysia, there isn't really any digital lending. That you either get a loan from a traditional bank or you go to a loan shark. So we're going to be among the first to start giving out digital loans in Malaysia, and it's just a massive market and hugely untapped market, and it's only going to grow. I mean, Southeast Asia is 700 million people, half of which are under 30 years of age. They're all consuming. It's one of the fastest growing consumer markets in the world. So, like, yeah, there's just a huge amount of growth. It doesn't even need to be competitive in some areas in the amount of growth if you look on a long-term basis.
Chris, just a thought. I mean, perhaps you could share that when you go for lending, obviously the question comes of managing your non-performing loan or the collection, especially if you're going for peer-to-peer or digitally disbursing those loans. So what's your thinking around that?
Yeah, I mean, it's the same. I mean, essentially every financial decision is basically a risk-adjusted decision around what you do. So we will go after small segments in which we lend to, and we'll learn around our learning algorithms and our risk and credit scoring around those cohorts. And then actually you need to make bad loans to actually understand like your risk models. So it's a learned situation. It's actually very similar to traditional lending. It's just the format in which it is done and the data modeling that you do is probably slightly more advanced than the traditional ways. But loan collections, all of those things remain fairly similar.
Yeah, I mean, it's an interesting area to observe because, traditional banks have got a foot on the ground, something to look at the credit scoring, and especially where the legal infrastructure or your ticket size is very small. How do we manage that will be something to watch in the future.
I mean, go ahead. Sorry.
So I was just going to say, I mean, there's also alternative lending based around, just pulling API data from e-commerce platforms and you can provide working capital to many different small and medium-sized enterprises by actually just looking at alternative data sets as well. Supplementing traditional credit scoring data as well.
I'm sure you're looking at like banking as a service, which is SaaS, as well as software as a service kind of a model, also to value add to those small enterprise.
Are you guys seeing the traditional banks, responding in any way to the kind of innovations or, the things that you guys are introducing to the market? Chris? Yeah.
Yeah, I can take that. I mean, in the markets we're in Malaysia and Singapore, all banks globally are obviously developing banking apps, and what they're tending to do with the banking apps though is they're building on top of traditional systems, and they're built by traditional teams, and they don't have necessarily the ability or speed to build from scratch. I think some banks are taking what I'd call this kind of sidecar or speedboat approach, which is I am going to just take a greenfield project and go do it in parallel and then leverage my banking licenses for this, which is probably more effective than just reskinning a traditional banking stack. Because the problem with that is it's a bit like putting a spoiler on a very old car. Like fundamentally, the engine doesn't work very fast and isn't very good. So yeah, I think it will be a divide, right? There'll be some banks that get it right, and then lots of banks that don't get it right. But I think that actually fintechs, well-funded fintechs, will have an inherent advantage in terms of culture, in terms of tech, in terms of approach than even the bigger banks as well. And you don't have all the legacy costs and that the banks have as well.
I think what Chris said, just to add, Hong Kong, for an example, 7.5 million population, 160 incumbent banks. So it's going to be quite a fierce competition in that space for the virtual banks. And some traditional banks are also using that as a test bed in Hong Kong, like Standard Chartered had Mox, who launched, and they would probably expand to the expanded region in China, and then probably apply some of the digitization agenda for their existing footprint in, say, Singapore, for that matter. So many of these traditional banks are also trying out, as Chris said, through a separate way. Instead of changing the entire technology stack, you start a new ways of doing banking. And obviously that has an advantage of cost to serve. And then you drive customer behavior into those platforms and channels through virtual banking.
And can I just add something? Hong Kong and Singapore are two of the most developed markets in the world, with some of the most banked populations in the world. You mentioned where Hong Kong is. Singapore has an average of 7 or 8 plastic cards per person, not short of financial services. I guess we look at the world a little bit differently. Obviously, Singapore is an important market for us, but Malaysia is our first and largest market. And we're also looking at ASEAN markets, Indonesia, Philippines, Thailand, all of these markets. They're wildly different from what the model and consumer behaviors that you see in Hong Kong and Singapore. Yeah,
I mean, just to add, like for AMTD, we have in the recent past, you might have heard, we have acquired FOMOPay, which is a payment platform across Southeast Asia region. They are fintech, Singapore incubated company. Similarly, as part of our platform, we have PolicyPal, which is another company which is on InsurTech. These are all part of the ecosystem play in the financial services sector that we are looking at expanding and trying out different ways of serving the client who are unbanked or don't meet the requirement to onboard into a traditional bank. But we can do the reach out by providing those platforms and applications for customers to take services.
Can we talk a bit about regulation? Because obviously, I think some of these markets have been protected for quite a long time by regulators. Are there still challenges, getting past regulation, to do what you guys really, companies really want to do?
Yeah, I mean, the regulatory burden of virtual banking is still, onerous, but I think the bigger thing is capital requirements. So the capital requirements are quite significant. So I think in Singapore at the second level is about 1.5 billion Singapore dollars, and Malaysia moves up after the initial stage to 300 million ringgit, so $75 million. And then there are restrictions, I talk more about Malaysia, whereby the limit on the number of assets that you have as well. So you just have to build in the business model that works within the constraints of both the regulations, what you're allowed to do, and your capital requirements, and the limits of what you can do as a business, which I think is probably the defining parameters.
I think one of the biggest challenge is the regulatory compliance, and banking is a service which is very unique to compare to any other, I would say, where it is fundamentally you are taking money before you lend money. So it's an element of trust which customer has to have on, particularly difficult and challenging for a platform which doesn't have a physical presence. So I think the regulatory landscape is still evolving, but the challenge is about how do you play within the given boundary? Because today, for an example, there is no market that gives a leeway from a regulatory lens that you can compromise just because you are a virtual bank. You are given some exceptions. So data privacy, cybersecurity, these are big issues. PDPA or GDPR, those regulations globally apply. So it's a very unique and difficult challenge for catering all these requirements locally and cross jurisdiction. When you go for cloud hosting kind of a platform, multi-country jurisdiction, those aspects, I think traditional banks have got the know-how, but they probably lack the technology solution or platform to apply immediately, which the fintech has an advantage. So I think somewhere in between, we will see the emergence of or convergence of solution coming up that a lot of people and sponsors are trying out.
Cool. So just to wrap up, I would like each of you to make a short prediction of what you predict for the virtual banking space in Asia in the next 5 to 10 years. Chris?
So I'm going to give you a bit of a left field answer on this. I don't think you'll actually see them coming out of the virtual banking frameworks because they're actually taking many of the traditional guys, they're putting them in large syndicates, and it's very hard to focus. I think actually some of the largest financial institutions you'll see in the 5 to 10 years will be standalone ones that come and maybe acquire a traditional bank license that gives them free rein to operate and grow in some of the larger markets like Indonesia, Philippines, and go from there. I think in highly competitive markets like Hong Kong, Singapore, is going to be very challenging, especially to build a bank in any form of a syndicate. And then I think in the other markets, you're going to see some explosive growth, maybe if through the virtual banking framework, but quite possibly not.
Osman, what's your prediction?
I don't think it's significantly different, but I would say that we can expect significant growth actually arising from booming IT infrastructure, which is a huge play coming up in the near future, and the large investments that we are seeing both from private and the public players in the region. I would say more consortiums and partnership in fintech will play a bigger role with financial institutions, tech giants, and other large corporations, I would say, will play a big role. And last but not the least, I would say the improved financial inclusion in historically underserved areas will be catered through 5G, which is coming in a big way. So there are 3 areas I would say we'll see significant change coming up.
Great. That's great. Very good session. Thank you so much for sharing your views, and thanks everyone for listening.
Great. Thank you very much.
Thank you, Chris.
Thank you,
Serena.
Thank you, Serena.